Hi, everybody. My name is Faye Hoffman. Oh, what's that? Somebody just changed something.
Oh, okay. I made a mistake. Wait a moment.
Oh,
I play.
everybody. My name is Faye Hoffman with Homeward Residential. I've worked at Homeward Residential for 3 years, almost 3 years, and we would like to start doing business with your company. What you see on the screen now is the homepage for our website, and in the lower right-hand corner, you'll see Join Our Mailing List. So if anybody would like to receive daily rate sheets or notifications of when program changes or specials, this is where you would join our mailing list. As you can see at the top, we have different categories, and I want to point out where it says products and guidelines. You guys are a part of the Client Select group. So if you were to go under products and guidelines and you would see Client Select, you can click on the different products that we have. Pretty much right now, we're doing a lot of fixed rate loans. You can see our Homeward underwriting guide by pressing this button. And then we have an easy to use matrix that shows you the loan to values, the maximum loan amounts. This particular one is for the conventional conforming fixed rate products. And what I'd like to point out is we break it down by primary residence, second home, and investment. And if you'll notice on here, you'll see investment, and we allow investment cash out. So there are not many lenders, or not all lenders, will allow investment cash out. On the conforming product, we can do Fannie Mae DU or Freddie Mac LP. We do not charge different pricing for the Fannie Mae DU or the Freddie Mac LP. So if you choose, for example, you have a 1-unit cash out investment property, the maximum LTV, CLTV, is 75% with a 620 FICO score. So this chart is very useful because it shows you everything in a snapshot. Also, you'll notice that on the second page, it gives you just some basic information about qualifying ratios. We allow you to go up to a 50% maximum debt-to-income ratio as long as you get an AUS approval on either DU or LP. We try to follow the DU and the LP as closely as possible. There are some overlays, and I'll get into that in a little while. Here on the second page, you can also see all the product descriptions and the codes, product codes. Now, at Homeward, we allow you to do any term between 10 and 30-year term in 12-month increments. So, for example, if you have a rate and term refinance and your borrower has had the loan for 3 or 4 years and they only have 26 years left on their mortgage, their current mortgage, and they say to you, I don't want to start off with a 30-year fixed again. I've already paid 4 years into my mortgage. You can offer them a 26-year term with Homeward. And this is unusual. Not all lenders will allow you to do that. So if you were to choose a 26-year term, you see here where it says 21 to 30 years, any term between 21 and 30 years, you would price that off the 30-year fixed conforming pricing. Same thing for the 20-year product. Anything between 16 and 20 years, you would choose the 20-year product. And anything between the 11 and 15 years, you would charge the 15-year product pricing on our rate sheet. So This is a good sheet to have, and if you are interested, you can download that. Also, I'd like to point out, we also have the super conforming, and this product is for Freddie Mac High Balance. So we have Freddie Mac High Balance, which Freddie Mac super conforming, or we have High Balance, which is the DU product. On the rate sheet, they're not differentiated because we don't have differences in pricing between DU and LP, but as far as product goes, there are differences in loan to values and guidelines. So if I show you the matrix for the Freddie Mac High Balance, you'll notice that there are some items here. For example, non-occupying co-borrower. Some of you may know that on LP you can blend ratios and have a non-occupying co-borrower. Also on LP, if you get a one-year tax return finding, on the LP you can do one-year finding, one-year tax returns. Now, if you have more than 4 financed properties, then you would have to use the High Balance DU product. And if we click on this, you'll notice that on the second page, I believe, let's see, Florida, no, it doesn't have it, but just please make a note that if you're going to do 4 or 5 to 10 financed properties, you would want to use actually, if you have more than 6 financed properties, you would want to do DU. And you'll notice that we still allow cash out on investment property. Now, if you're doing 6 or 7 to 10 properties, the minimum FICO score is 720. You'll notice here, if you were doing a 1-unit property and the borrower only owned 4 properties, then the minimum FICO score is 620. But when you get to 7 to 10 properties, if a borrower owns 7 to 10 properties, then your minimum credit score is going to be 720. And you can do that on DU. LP allows you to go to 6 financed properties. So just remember, anything to 6 financed properties, you can do DU or LP, and anything over 6 properties, 7 to 10 properties, you only can do DU, and then there's a minimum FICO score of 720. And we're one of the few lenders that allow cash out on anything over 4 financed properties. So, and one of the reasons I mention this, and let me go to a different area, once you have signed into our website, our LOS system is called MortgageBot, and this thing is in the way. Let me see. Oops, sorry. Let me go to, I'm trying to move this thing so that I can, okay, once you've signed into our website, under resources, if you wanted to get rate sheets, you would go to links, and then at the very bottom you'll see Homeward Wholesale Rate Sheet. So all of these are the older rate sheets. So for example, if you locked a loan and you wanted to look at that day's pricing, you could go here and look at any day that you want the pricing. This here is today's rate sheet. So on the rate sheet, you'll notice as we open it up, it is very small, so you can increase the size of the font by just pressing the plus sign, and then you can see the rates. We have 15, 30, 45, and 60-day pricing. Our turn times right now are excellent. We're 1 day in every stage of the process. So 1 day in submissions, 1 day in underwriting, 1 day for conditions. When the file goes in for final review, it's around 1 to 2 days, and then docs are 1 to 2 days. So it is possible to close a purchase or a refinance now in less than 30 days. But remember, when I say that, it all depends on your borrower and how quickly you react to things and how quickly you can get the appraisal. The appraisers are usually taking around 7 days. If it's a 2 to 4 unit property, it's going to be a little longer. So keep that in mind. Obviously, if you are very quick, your processor is very quick, and you can get conditions into us quickly, we can close loans very quickly. I just had a loan that went to docs in less than 19 days. So it all depends on how quickly you react and how quickly your the appraiser will get that appraisal done. On the first page of the rate sheet, you will see the 30-year fixed conforming, 20-year fixed conforming, 15-year conforming, and 10-year conforming. We also do not charge in the state of California for waiver of impounds, and all the adjusters are at the bottom here. We also have LPMI, so the adjusters for LPMI, which is instead of using monthly mortgage insurance, you can use LPMI, which is the pricing is added into the rate. On the second page of the rate sheet, you will see our 30-year fixed high balance conforming and the 15-year fixed high balance. We also offer LPMI on that, and all the adjusters are there, and then all the adjusters are on that page. We also have the Freddie Mac Open Access Program, which is the HARP program. We have that for Freddie Mac, and we have it for Fannie Mae. We don't get many loans on that, but we get a few here and there. The primary, in my opinion, the primary product that we are offering and has the best pricing is the 30-year fixed conventional conforming fixed. And one thing I wanted to point out to you is that we give very, very high rebates. So you'll notice here that we go up to 7-point rebate. And why is that important? That's important because let's say you had a 2 to 4 unit investment cash out, or a 2 to 4 unit, let's say, investment property. You wanted to cover some closing costs for your borrower. So if you were to look at the add-ons for, and these are pretty similar amongst investors, let's say you had a 2-unit property, that's a 1-point adjuster. And let's say it's investment, that's another 2 1/8. And let's say, I'm not sure what your compensation is, but let's say it's 1.5. You need a 4.625, or just to cover your adjustments and your compensation. So when I say that you can get up to 7 points, it's important because you can cover your compensation, you can cover all of your adjusters, and you can cover closing costs and prepaids for your borrower. We get a lot of loans that are investment property, 2 to 4 unit property, cash out property. Those are the types of loans that we get a lot of. And when somebody sends us an investment property, many times they send us more than one for the same borrower. And the reason I bring that up is because if you let me know that you have, let's say, 2 investment properties for the same borrower, what we can do is we can have those 2 loans go to the same underwriter so that you're not getting 2 different sets of conditions, because different people interpret things differently, and that way you don't have all these conditions that are, for individual loans. Basically, they're underwritten together, and the benefit of reducing maybe a monthly payment on one loan is taken into consideration on the other loan. So we get a lot of multiple loans for the same borrower. Now, we do have a guideline, an overlay, where we will only take up to $3.5 million in loans for the same borrower, or 4 loans for the same borrower. So keep that in mind. But I just had one where I was doing 4 loans for the same borrower, and the broker submitted all 4 loans together, so that they all went to one underwriter, and it was a lot easier than sending, one loan to this investor and one loan to that investor, and having to ask your borrower for a million conditions, because every investor and every underwriter looks at things a little differently. So again, that's why I bring up the high rebate to you. And I'll pause right here, and if anybody has any questions, maybe you can ask your questions, and then I can continue. Any questions? No? Okay. No? Okay, that's fine. Certainly when you submit a loan to us, I can walk you through how to submit the loan. Right here on the home page, again, you don't have to sign in to get to this page. All of our product guidelines and our matrices are all available to you here. We also have a forms section. So let's just go through the forms section. We can either prepare your LE for you, or you can prepare it. We do allow, when we prepare the LE, once we've prepared the LE, we will release the file back to you, and then you can upload your intent to proceed after the borrower has received the loan estimate. Now, we don't require the borrower to sign any document. Like, they will get the loan estimate electronically from us if you want us to prepare it. We have a form that the loan officer signs. So the broker can sign the verbal intent, and all you have to do is your borrower has to say, yes, I like the quote that we got on the loan estimate, proceed with my application. So then the loan agent signs this form, which is a broker verbal intent to proceed certification, and that's just saying to us, yes, my borrower gave me verbal consent to proceed with the loan. So you would upload this particular document to our site, and we would proceed with your file. So that's how we handle the loan estimate. Either way, you can prepare it or we can prepare it. We have one form, which is a submission form, and all the other forms are here. Now, we have a fee schedule. Our fee in California is $899, and that is all-inclusive. So we don't have multiple fees. If you have excess premium credits, we have some frequently asked questions, some guides for you on what to do with excess premium credits. We do allow principal reductions for lender-paid compensation of 2% or $2,000, which are lesser, on limited rate and term refinance. And your borrower can get up to 2% or $2,000 cash back in hand, with it still being considered a rate and term transaction. So we go back to the forms section. We have an appraisal section. We have an approved AMC. I have 2 AMCs that I like to assign to my brokers in Northern California. One is Click Appraisals and one is Arribas. And the reason I like to assign those 2, although we have like 15 or 20 different approved AMCs, and certainly if you guys like one of the other AMCs on the list, we can have those assigned to your company. But the reason I like the two that I mentioned is because they are local in the marketplace. And I always like to have a connection with the AMC, know who the owner or the manager of the AMC is, and they have a local presence so that they know the properties in Northern California, and your appraisals will be more complete and more, they'll know the marketplaces and the little neighborhoods that sometimes some of these national companies, they just don't know the area. Under the underwriting section of the forms, we have all sorts of things. The only form here that I want to point out is the Social Security number verification request form. That form, I would sign it as a part of your application packet. We use Equifax, and you would order your 4506T, and so what we need to make sure is that you have an account with Equifax, and when you order the 4506T through Equifax, that you are ordering it under the billing section in the name of Homeward. We pay for those, so you are not responsible to pay for those. We just want access to it, so we ask you to pay for it. Once your loan is underwritten and once the appraisal is in, at that point in time you can request your CD. You don't have to wait till all your conditions are signed off in order to request the CD. Why is that important? It's important because you can get the clock ticking. So if your borrower acknowledges receipt of the CD and it's all electronically sent to your borrower, then the 3-day time frame starts from that date that they acknowledge receipt. And that way, by the time your conditions are all signed off, your 3-day time frame has passed, and you can get your documents, your closing documents, very quickly, and that's especially important on a purchase. So once again, you don't have to wait till all your conditions are signed off. You can request, and we have a form, request issuance of your closing disclosure, and we do require a couple of documents with that CD request. So we require the preliminary CD from the closing or settlement agent. We require all third-party invoices, appraisal invoice, credit report invoice, and any other third-party services. Like if you have a processing company, we allow you to have a processing fee if it's a third-party company. So we require the form and these items, and then you can request your CD from us. Once your file goes in for final review, your CD is already out to your borrower. We review final conditions the very next day. So once your file is cleared by the underwriter, then we have a QC pick, and it's typical that 1 out of 10 files, and that's for all files that are cleared to close on that particular day. Typically 1 or 2 files are chosen to go through QC. QC usually takes around 4 hours, and then the file is cleared for docs. Once the file is cleared for docs, you will get notification that the file is cleared for docs, and you would need to request your closing. You would fill out this form and request your closing, and you would email our closing department asking for a specific date to close your loan. If you don't ask for a specific date, typically they schedule it for a day or two, depending upon how quickly, and how many loans they have in closing for that particular time frame. If you have a condo, we have some condo forms here. We have a limited review condo questionnaire. Our underwriters review limited reviews, and all we would need is the insurance and the HO6 policy and the limited review condo form. If you have a full review, the form is here, and then we need additional documentation. Certainly, if you have questions on that, I know a lot about condos, and I'm more than happy to help you structure your deal, tell you which way, what you're going to need. And so it's important for you to know that I do know a lot about condos. Even if, let's say, your condo has more than, let's say, 25% commercial space in the building, sometimes, or let's say is mostly the project, your unit is an investment unit and the occupancy is more than the 50% required by a Fannie Mae and Freddie Mac, sometimes we can get a waiver on that from Fannie Mae. So, don't just say, oh, this is a non-warrantable condo, I need to, go to a different lender that's going to charge my borrower 8% or 7%. Call me and discuss it with me, because there might be times when we can go in for a Fannie Mae waiver and then the pricing is just like regular Fannie and Freddie pricing. So it's important that you know that, because the ultimate goal is to make your borrower happy and want them to refer business to you. And that's what my role is here, to help you with that. The best way to contact me, of course, is to either email me, and on the screen you'll now see my email address and my cell phone number. We have available to you this nice little handy handout, which gives you all the different departments and my processor's name, although that will be changing, but it's a team effort. So we have a lot of people, we've hired a lot of people to try and handle big volume, and now all we need really is loans, lots of loans. As you can see here, we have the rate lock hours, and I just want to mention to you about rate lock. You would lock your loans online. If you're ever having an issue locking online, we do have a lending support area. So if you can't get a hold of me and you need to contact somebody, lending support at homewardfunding.com is where you would be emailing. And I can send this flyer to Jerry after this, and he can forward this out to all of you. Lending support gives usernames and passcodes. If you get locked out of our system, they are the place that you would contact. Any problems with our LOS system, they would be the ones to contact. And the rate lock desk is here. So when you lock a loan, let's say you lock a loan for 30 days, and let's say you get to the 29th day and you decide, I need a couple of extra days. So we have a couple of policies with regard to rate lock. First of all, if rates are lower by a quarter point, you can request a 4-day free extension. If rates are lower by a half a point, you can request a 7-day free extension. And you can request that at any time. So if you think that you're coming towards the end of your lock and you're going to need more time and you see rates are lower, you can request a free extension. If rates are higher, then you can request an extension. The cost for an extension is 2.5 basis points of the loan amount per day. And so you just write rate lock, and they would be more than happy to add the additional days. You can request up to 30 days at a cost. Now, having said that, sometimes it's best to let the lock expire because our relock policies are very good. So let's say you're on the day of expiration and you compare the price that you have compared to the current market price. When you relock a loan, after the lock has expired, it's always at worst case pricing. But let's say you compare the price the day before the lock is going to, or on the day the lock is expiring, and you see that the rate is the same or it's just a touch better. You may decide that you want to let the lock expire, because if you let the lock expire, then any day after the lock expires, you can relock, and if rates are better or the same, you can relock the loan and get the same amount of time as your original lock at no additional charge to you. So there's no penalty that we assess. It's just worst case pricing, but if the pricing is the same or better, you get to keep the price you had. So it's very important for you to compare the price you had versus the current market pricing on the day of expiration if you need additional time. So during that time a couple of months ago when everybody was crazy busy and rate locks were expiring and lenders were taking a very long time to underwrite and get things done, our policies, it saved a lot of brokers because rates were a little better. So they just let the lock expire and then relocked and got another 30 or 45 days for basically for free. So we have a very good policy when it comes to that. Any questions so far? No? Okay. So we have this quick reference guide. We have our forms section. Any new announcements, you know, I send to you, but they are also found here. And I just want to make sure that I went through all of these. We also accept property waiver inspections. So if your DU findings say that an appraisal is not required and that you get a property waiver inspection code on your DU, we will allow you to use that. So that's important, especially on purchases, because now you don't need to wait or have the fee of an appraisal. Also, for salaried borrowers, we allow you to order just W-2 transcripts, and that's a big savings, not in money, but sometimes in time, because if you are doing a full transcript for some lenders and something pops up, like the borrower has a hobby type of business, now the lender is going to ask for tax returns. Well, if you're just pulling W-2 transcripts, we won't, you know, and they're salaried borrowers, even if they have a hobby type company, we don't ask for the full tax returns. So that is a very good selling point. And we don't charge extra for the W-2 only transcripts. We also don't have any minimum trade line requirement. So as long as you can get an AUS approved eligible or an LP accept, we accept the number of trade lines on the credit report. Why is this important? When you have non-permanent resident aliens, somebody with, you know, a work visa and an employment authorization card, which we allow, sometimes those borrowers don't have multiple numbers of trade lines, and they're, you know, sometimes they're new trade lines. As long as you can get an AUS approval, we will allow that. Also, we allow one-year tax returns if on self-employed borrowers, as long as that's all the AUS is asking for. Now, remember, they have to have 1 full year of self-employment on their tax return. So that's an important thing to remember. And these are just some flyers that we have.
Excuse me, I have a question now.
So I think I've covered a lot of different things. I'm going to stop there. I don't. It's only been 35 minutes, but I think I gave you a very good overview of Homeward. I've been in the business for 37 years doing mortgage lending. I know you can't see me, but I have a lot of knowledge on the lending side. A lot of brokers come to me with scenarios that they're just not sure how to structure, or, if you're a newer account executive or loan officer, you may not know all the right questions to ask when you have a transaction. And so with my world of experience, I might ask you 15 questions about a scenario, and that's because I want you to know all the guidelines surrounding, and the reason I ask the questions is because I don't want you to get caught with a guideline that you just weren't aware and you didn't ask the question and you didn't know about it, and then all of a sudden you send in your loan for underwriting and, oh my goodness, this, the underwriter's asking this question, and it opens up a million other questions. It's better to address questions before you submit a file than after the underwriter gets a hold of it. I always say to people that are new, and even loan officers that have been doing this a very long time, it's important for you to tell the story to the underwriter, not the other way around. Don't have an underwriter asking a million questions because you just didn't address certain, things in the file. We have, as a lender, all different reports that we pull, and we can almost tell who a cousin is, or who lives next door, or who's living in a property. Those are things that we know when we pull our reports. So if you're trying to pull one over on us, typically most lenders are getting reports these days, and they can figure things out by the reports that we get. So it's better to address certain things before we get the file, and to be upfront about what's going on. For example, multiple properties that the borrower may own. It's better for you to tell us about them and provide the documentation if someone else is making the payment, or someone else, a borrower co-signed on a loan. We're going to find out anyway. So it's better for you to tell us than for us to come back and ask you about it, because then the underwriter all of a sudden has, like, what else are they hiding from me? So it's always better to tell the story, and for you to tell the story rather than the underwriter to assume the story. Anyway, I look forward to talking to all of you and to receiving your scenarios and working with you and closing some business with you. Thank you very much. I appreciate your time.
So before you go, can I have questions?
Yeah, sure, certainly.
So for the self-employed, you only need 1 year full tax return, not 2 years required?
Okay, so the guideline is that borrowers need to be self-employed for 2 years. Mm-hmm. But if they've only been self-employed for 1 year, mm-hmm. and they were in the same line of work before, then when we get the 1 year tax returns, because your AUS only said 1 year, they have to have a full 1 year reported on the last tax return. So AUS will determine the number of years of tax returns required, but borrowers are required by Fannie Mae and Freddie Mac to be self-employed for a total of 2 years. And if they're not self-employed for a total of 2 years, and they're only self-employed for 1 year, then you can, as long as they were in the same line of work, and you have 1 full year, 12 months reported on a U.S. tax return, we would accept that.
Okay. But another one, you just talked about all the informations we gathered before underwriter ask. Should I just submit before the underwriter ask? For example, if I have the borrower have the investment property, they want to get refine one of the properties. So should I gather all the property investment, like the lease and the rental.
Taxes and insurance and
Yeah, insurance.
yeah.
So I get all the information first and send out at the same time to the underwriter, or I should wait till underwriter ask me?
No, if you have an investment property, the first thing you're going to do is you're going to run your AUS.
Mm-hmm.
And your AUS, the automated underwriting, LP or DU, is going to determine what documentation you need.
Mm-hmm.
If the AUS says that you need 2 years tax returns, and you need to provide us 2 years tax returns,
Mm-hmm.
and we'll go based on the tax returns for calculation of income.
Mm-hmm.
If the AUS says we only need 1 year of tax returns, you have to provide 1 year of tax returns. However, when borrowers own rental properties and you're doing a rental property, we typically ask them, as well as the tax return, and proof of what the taxes and insurance are, and if they have a mortgage, sometimes, most times for. So we would need you to provide all of that documentation. Now, if you don't have it all, it's going to be a condition of the approval, but it's always best to try to get the most complete file to the underwriter, because then your approval is very clean and you don't have a million conditions.
Yeah.
If you can't, because your borrower is very slow in getting you documentation, then and you just want to get an approval, then I would submit what you have. Just realize that there are going to be conditions on the loan that are going to ask for those additional items.
Yeah, I just thought the same way as you. I collect all the property, the tax and insurance and the lease and the rental, and then another, the processor said wait until the underwriter asks. So now I get it. So if I get all together the information supposed to be required or asked by the underwriter, I should submit to the underwriter before they ask.
Mm-hmm.
And then it will be faster, is that right?
Not necessarily faster, because our turn time is our turn time. I mean, it's 1 day to underwrite a file, but it's going to be, when you get your approval, do you want 20 conditions or do you want 5 conditions? So the more information you give up front, as far as especially when it's investment property, the more information you provide to us, the less conditions you're going to get. Yeah. So it's really, if your processor doesn't, and you don't mind 20 conditions because you didn't provide us all of the information up front, then that's fine. It's, whatever way you want to operate. I just think that it's a lot easier for an underwriter to gather all the information at the same time when they underwrite a file, especially, and this is why I say it's best to give it up front, because let's say your ratios are borderline. If we don't have all the information and the underwriter, let's say, calculates income a little differently than your processor or you did, then you may get a suspense. But if we have all the information, we know what the taxes and insurance are, we have the lease agreement, we have the tax returns. If we have all of that, then the underwriter can calculate exactly what your ratios are, and may not have any issue and issue an approval versus a suspense. Yeah, so that's why I say, the more information you give us up front, the more likely you're going to get an approval, and the more likely you're going to get a clean approval with very few conditions.
Yeah, exactly. Thank you. Mm-hmm.
Yeah. Anybody else have any questions?
Hi, Faye. This is Jerry. I want you, is it possible you give some a very simple summary? What is any advantage of your company's program? Because we have like more than 20 lenders here. It's difficult. And read. What kind of borrower or some kind of reason we can choose you. Otherwise, we just use interest rate. Can you talk about?
Well, interest rates are good. As long as you have the cleanest file and you have nothing complicated. But, every lender looks at things, a little differently. And if you're using a lender that you're not familiar with, sometimes, there are things that you're just not aware of, and the file gets there, and all of a sudden it's a problem. First of all, one of the reasons to use Homeward is because I'm there. I'm very well known in the marketplace. A lot of brokers know who I am. I've been doing this 37 years. I have a world of experience, and I'm there to help you through our process, which a lot of account executives out there don't even return your call. So, or they call you 2 days later. Well, you have a borrower at the other end of your phone screaming at you because they want something, and your account executive's not calling you back. So I think one of the main reasons you would use Homeward is, number one, because I'm available to answer your questions and help you through our process. Number two, we do some unique things. We have some high rebates for non-owner cash-out units, and a lot of brokers send us multiple deals on non-owner because they like one underwriter to underwrite all their files. On the if you have one borrower and you're submitting 3 loans for the same borrower, it's easy. We have some unique things like the term of the loan. Some borrowers want a 26-year term. We have that available for you. We have PIWs available for you on the appraisals, where we waive the appraisal, and so that's available. We have the fact of W-2 only. You don't have to order full tax transcripts all the time. That can open up a can of worms by, ordering a full tax transcript. Our pricing, Fannie Mae and Freddie Mac, same price. They have different guidelines. Sometimes you have to use Freddie Mac versus Fannie Mae or vice versa. Same guidelines. The fact that we can do up to 10 financed properties, and we can do cash out on investment. Those are the reasons why you would be using us.
Okay, thank you.
Yeah. So if anybody has any questions, my email address is there. My cell phone is there. Please feel free to contact me. I'm more than happy to answer your questions. And when you have your first deal for me, the processor, I just had a new company yesterday. They were submitting a new file, and I walked through and stayed on the phone with the processor, helping them, register the loan and going through the process of our website, so that, sometimes processors don't want to use a new lender because, they're not familiar and it's extra work. I'm there to help processors and, loan officers with their first loans, and I think that if you submit some loans to us, you'll like our service and you'll like working with me. And I look forward to working with you guys.
Okay, thank you very much. You have a good day.
Yeah. Okay, thank you. Bye-bye.